CrossSwap is now the perfect time to buy. Today, we are going to focus on pure technicals, one of my absolute favorite setups using Elliott Wave and Fibonacci, momentum, and some time analysis. More often than not, it plays out and it becomes quite predictable. Remember, we only do probabilities and never certainties. So do your proper risk management, do your own research, and take full responsibility for your results. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro, featured in the best-selling book, High Probability Trading Strategies, back in 2008. The author is Robert Miner, one of the best technical traders on the planet. I used to focus on currencies, but now exclusively on cryptocurrencies. So let's dive straight in. So I do, if you bought one of my courses, you've done a masterclass, you can buy one of my courses, huge discount at the moment. You get invited to my private Telegram, and we do some workshops. And it's normally on Saturday. I'm just trying to give value, make sure people have all the skills and are using them. So this workshop was on the 13th of November, which was 3 days ago. And what we said with CrossSwap in the private workshop was that it's forming this very nice 1, 2, 3, 4, 5 Elliott Wave pattern. And if you haven't taken my free Elliott Wave and Fibonacci masterclass, it's in the link below. I put in endless hours to simplify it. But what normally comes after a 5-wave sequence is a correction, an A, B, C correction. So what I wanted to show you today, I want to reference this because a lot of people don't realize how powerful this can be. Right? Is most markets move as a wave 1 and then a wave 2. Right? A wave 1 and a wave 2. But the wave 1 often breaks down into 5 waves in itself. Right? Hopefully you can see that. Hopefully that's clear. It breaks down to 5 waves, and then the wave 2 tends to break down into an ABC, 3 waves, and then we get a wave 3 bullish movement, right? And what we're looking for is often a wave 3 of a wave 3. It tends to be very impulsive, very aggressive, and it moves very, very fast. So what we've got happening with CrossSwap, it seems textbook. It's forming as anticipated. So we saw this nice textbook 1, 2, 3, 4, 5, and then a nice ABC correction. Now here it just looks like a straight line. But if you go to a lower time frame, like we can jump into like a 4-hour chart. When we jump into a 4-hour chart, it's not the cleanest of ABC corrections. However, you can see that there's overlapping waves. And it's going down. Is it going to kind of play out a bit longer? All we know right now is that we've reached a typical Fibonacci price zone, and we're reaching a typical minimum Fibonacci time zone where the price tends to then take off. No guarantees here, just probabilities, never certainties. You know the score by now. But what I wanted to reference was we did a very similar video on, when was this? October 23rd on CrossWallet. We've been watching these very, very closely. CrossWallet, and we said, look, there was this nice move up. I changed the wave count because I had new information. We said this actually is like a wave 1, and then this nice 3-wave structure for a wave 2, and then we should expect a nice impulsive move. And then what happened with CrossWallet was we looked at this movement here as the first part of the move, then there's movement to the downside, right? That's what we're looking at here. That's what we're looking at when we're looking at this. There's movement to the upside and then a correction. There's typical identifiable patterns. Now, 50 to 60% of the time, they're really, really clear. And when they're really clear, we want to use that information. And what happened with CrossWallet, literally, it just took off, right? Wave 3 took off, and it was a very nice wave 3. Very nice wave 3. In fact, it was overextended. It just kept on going and kept on going. And it went from, when we first brought out the video, it was down here actually. It was more like 0.013, thereabouts. It moved up to 5-6 cents, corrected down to around 3 cents again, and then that was when we did another video, and then it just really took off, right? Really took off, and currently hovering around 23 cents, but it's been as high, if we use candlesticks, you'll see there was some very aggressive buying happening. It went as high as 45 cents, right? So it's just really, really significant, like a 30x, 3,000%. But what I'm showing you here is identifiable patterns ahead of time, right? Because it's no good, having the information in hindsight when this has happened already. Well, the party's over, or this main part of the party's over. We want to be focused on making our buying decisions down here and ideally down here, right? And that's where I believe CrossSwap is right now. So if I just zoom out first, let's just see the price action of CrossSwap all in all. This is a 4-hour chart. You know, when I did my first video, it was around down here somewhere at around 13 to 15 cents, give or take. Had this nice movement to the upside, you know, 60, 65 cents. A good ABC correction for what looks like a wave two. And then we've had this nice 1, 2, 3, 4, 5, and we're looking like we've got this correction. So what I'm seeing here, and I covered this on the workshop on the weekend for my private Telegram group, is I said, look, guys, what this looks like to me, from my 15 years of experience at looking at charts, you know, a lot of currencies, but now we focus on cryptocurrency, is it looks like we got this nice wave one, we got this nice wave two, right? That seems quite obvious. But this part's not obvious because you have to take into account there's different degrees of counts. There's waves within waves. And I actually cover that in my free Elliott Wave and Fibonacci masterclass. I aim to simplify it because it can be quite complex. But what we tend to have on a macro is that we're anticipating this wave three. This is a 2.618 price target of $1.76. And these tend to overextend, especially when they're really strong projects with a lot of eyeballs and a lot of volume, right? This is what we anticipate. However, this wave three will then tend to break down into 5 waves. 1, 2, 3, 4, 5. That's what these red lines are that I drew over the weekend. So what I'm seeing here, it looks like we've done this initial wave one of a wave three, and it looks like textbook style, we're forming this wave two of a wave three, and then we should anticipate a wave three of a wave three, which tends to be quite impulsive, quite aggressive. Is it guaranteed? Absolutely not. But there's a few pieces of information that is telling us that. Again, remember, I did this video on, was it 13th, which was Saturday. Saturday gone. Today, what's today? The 16th, so 3 days ago. 3 days ago, right? So what we want to look at clearly now is what's likely to occur next and why, right? So it's pure technicals. We're not even looking at the fundamentals right now, right? Fundamentals, because there's fundamentals, which is like, you know, the tokenomics, the project, the roadmap, when's the project going live, you know, the team, and so on and so forth. But right now, we're just looking at buying and selling behavior. Because you've got to remember, most markets, all markets, not just crypto, massive part of it is pure speculation. Pure speculation, which is okay, but we just want to understand that, right? So now I'm going to just get rid of these lines because there's a lot of lines here. Let me just get rid of these lines. Keep the numbers in play. Get rid of these lines. Numbers in play. So what I've done this in advance. I might just do it again. Let me just do it again so you see the method behind the madness. And then I'll show you what we anticipate next. So the main focus is this 5-wave sequence here. This 5-wave sequence here, right? So we got this, what looks like very clean. You know, I was using in fact, sorry, I'm gonna use a daily chart. Daily chart is just a bit cleaner, and it eradicates a bit more of the noise, gets the noise out of the way. Just gonna do it like this. Yeah, just like this. Perfect. Yeah, that's clean. Right, so what we're looking at here, just so we're on the same page, is a nice wave one, a wave two, a wave 3, 4, 5, yeah, followed by an ABC correction. Now it looks like it's just a straight line, but we saw with the 4 hours there's waves within this, but we're just focusing without the noise, right? So we're looking at this. And again, the reference, Elliott Waves. Elliott Waves is a real thing. You know, a lot of the time markets just play out perfectly like this. So what we want to do is most common for a wave 2 low, which is down here, a wave 2 low is, and if I just pull it up like this, let me bring this, because this is, I'm just going to educate you on this, which is 2 degrees of counts. I'm just going to go over that again because sometimes I go for it very, very fast. 1, 2, 3, 4, 5. So 5 of a wave 1, of a wave 3. So it's actually 3 degrees of counts. All right, my page just refreshed. Let's see if it pops back up. You know, all right, let's give it a second. Wi-Fi, don't let me down. Don't let me down, Wi-Fi. All right, we gotta be patient with this. Jeez. I'm using Dex tools. Dex tools normally perfect. Don't know if it's my Wi-Fi is playing up. I might just end up doing some random drawings. I'm gonna do some random drawings, right? We'll just go with the flow here. We're gonna go with the flow. All right, let's go with the flow. All right, got this. This is almost textbook what we've got happening right now. Right now, it's just textbook. So I'm gonna get out the annotation tool. Let's just do some drawings here. The show must go on, right? The show must go on. So we got this 1, 2, 3, 4, 5. And what we're going to do is we're going to measure this distance. We're going to measure this distance from here to here, right? So this low to this high, we're going to measure it. And we're going to do a retracement. And typically it retraces down between around 50%, 62 to 78.6. And we saw it's in that zone, is in that zone. And then what we're going to do is we're going to measure how long did this wave 1 take? How long did it take? And then we'll project forward 50%. 50% is a typical correction time, so it kind of forms the zone to 100%. So we're now in this time and price zone, over here. So what we're going to anticipate next is the wave 3 of a wave 3, right? A wave 3 of a wave 3 that tends to be quite impulsive, and it will tend to more often than not look like, let me just draw it like this. If I can get it up there, boom, like this. This is what we're anticipating. So $1.76, $1.20, $1.50, $1.76 from today's price. Today's price is around 50, 55 cents, give or take. You know, there's great staking rewards and so on and so forth. But that's what we're anticipating. So let's just see if the chart is behaving. If not, we'll wrap up. We'll wrap up without the drawing. Hopefully you get the gist. All right, let's see if it's come back. All right, it's come back. There we go. All right. So I'm used to doing live events, right? You have to just go with the flow. So the information that we wanted to have as well is this momentum indicator. This daily momentum indicator is oversold. So when the blue line crosses the red, that will indicate 3 to 5 days of upward movement. That's combining with price. Now let's just do it on the chart. So you saw the theory. Now let's just do the live version. I love using DEX tools and TradingView because it just does the hard work for us, right? It calculates the numbers that we want. Like we said, is 50, 62 to 78.6%. They're the typical correction zones, price zones. And then if we measure the time it took to form that 1, 2, 3, 4, 5, and it's 50% to 100%, which is here, right? So this is what we're looking at. I like to draw a nice pink box. Yeah, it's saying, look, we're getting very close to the minimum time. We are in the price zone, but the momentum indicator is looking like in the next few days it's going to have a bullish reversal. And what's the clue? Well, look at this movement here and this movement here on the indicator. I don't know if you can see that. Let me pull it up like this, like that, right? Can you see that? Yeah, you can see that when the blue line crossed over the red, the low was made. It lines up. It helps us see the momentum of the market. So when we get a combination of pattern, which is Elliott Wave, 1, 2, 3, 4, 5, ABC. When we get price, which is the Fibonacci retracements, we're just keeping it really, really simple. We got time, so 50 to 100% of the previous swing is where correction normally ends. And then we got momentum. We got 4 pieces of information saying we look like we are forming the low down here. It's not guaranteed. Anything can happen in this game. Anything can happen. You know, major selling can occur for some reason, but the likelihood is we always want to go with the probabilities. And if this is the case, what will tend to occur next, like we saw with Cross Wallet, like this, is the next impulsive wave. So now we're just going to do a bit of perspective. Let's just get rid of the momentum indicator. Let's just get this like this, and let's just squeeze it down. What will tend to occur more often than not is a wave 3 or wave 3, something like this. And then we'll probably get a wave 4 of a wave 3, and then a wave 5 of a wave 3, something like that. Yeah, and then we'll kind of approach that $2 zone. So pure technicals today, people. If you haven't already, take my free Elliott Wave and Fibonacci masterclass. It is in the link below. It's absolutely free. You do get an opportunity to buy one of my courses, which is at a massive discount, and then you get an invite into my private. A lot of you ask me on YouTube, how do I get into your private Telegram? If you buy my course, you'll get invited to my private Telegram because we want everyone to be at a certain level that's in the community, and the community is growing really, really fast. We do workshops, like normally on Saturdays, and that's what this one was. That's what this video was from. You know, this was the ABC correction, and it's coming into that zone, playing out just textbook style. And when it does that, we want to take that information, and now is the time, ahead of time, because we're using leading indicators. We're trying to project in advance what's likely to occur, so then we can make buying and selling decisions beforehand. What also tends to occur, because people don't realize this, is fundamentals are actually baked into technicals. What tends to occur for a wave 3 to really take off like this, normally it's stimulated by some type of positive news, which is fundamentals. You know, whether it's version 1 goes live or there's a new partnership or there's a new listing on an exchange. I don't know. It could be anything. Could be anything. But something can stimulate this, and it will just drive that wave 3, and then there's profit taking that occurs, which is wave 4, and then the next wave 5 or 5, and then a bigger wave 4 correction, and then the real party starts to begin. Because in crypto land, the wave 5s, and especially the wave 5 of 5s, tend to be the impulsive wave because of FOMO, fear of missing out, panic buying, and so on and so forth. So there you have it, people. Is now the perfect time to buy CrossSwap if you haven't already, right? Because the reason I covered it in my training on the weekend, we covered a few things. We actually covered swaps. Swaps, everyone in my private Telegram groups gets premier access to content. When I spot things, I tend to show it to the community first before I do a video, etc., and X, Y, and Z. But the reason I wanted to cover CrossSwap was I knew most people are going to panic, because the price did shoot up to, I think, close to $1, 65 cents to $1. And then when the price pulls back 50%, it's scary if you don't know what's happening. But when you realize that profit taking, especially wave 2 and wave 4 profit taking, is natural, it's normal, it's healthy, it's like a breather, it's a rest period before the next sprint, then you can act on a higher level without the emotions driving you crazy because of fear and greed, optimism, pessimism, fear, uncertainty, and doubt, and fear of missing out. All of those things are real because thoughts are real and thoughts tend to create your reality. So let's finish on a quote. What's today's quote? Chapter 5 today, Leonardo da Vinci. Simplicity is the ultimate sophistication. You'll notice that I keep my charts pretty clean in terms of the technicals. I don't have too many indicators. I've seen people's charts. Sometimes they have like 50 indicators, multiple moving averages, and Bollinger Bands and MACD and everything, right? And I go, that's all good. That's all good. But simplicity is the ultimate sophistication. So we're looking for a confluence of events. We're looking for pattern. We're looking for price. We're looking for time. And we're looking for momentum. Yet when 3 of the 4 are lining up, especially if 4 of the 4 are lining up, then it's very highly probable, and we do probabilities, never certainties. When we're looking at fundamentals, we're just looking for just simple information, with market cap, strong roadmap, track record, solving a problem, is there a niche, and so on and so forth. And then when we've got those, especially fundamentals and technicals line up, then we're onto an absolute winner with probability, high probability, but never certainties. I know everyone's saying that now. Everyone's repeating it. Everyone's repeating it in the comments in my group, which is brilliant. Because I love it. Because most people either have, I don't know, the expectations that every single trade or investment is going to be a winner. That's not the case, right? That's why we have risk management. There's certain positions, even the videos that I've done, maybe it's 60, 70, 80, maybe even 90% success rate, which is quite high. Anything above 40% is extraordinary in the trading world. 50, 60, 70% is like unreal. So we want to know that 10, 20, 30, 40% of the time, we're not going to be right. And, when we see these potential wave 3s kicking off or about to kick off, the opposite may happen. But that's why we have a portfolio risk management. We're doing retail venture capital. We're using fundamentals. We're using skills of technical analysis and trading. So we have proper risk management. You want to be getting risk-free and so on and so forth. So there you have it. CrossSwap, like, subscribe, hit the bell notification. I can't wait for the DEX to go live. I can't wait for the DEX aggregator to go live because it's going to be linking in with other, have partnerships with Cross Wallet. I think they're going to partner with, integrate with swaps, and then, Astro Swap, and then there's Wagyu Swap, because it's a DEX aggregator, yeah, similar to 1inch, the way that works, but with other things that no one's ever done before in terms of making it easier, safer, more smooth for projects to launch, and easier, safer for early investors and long-term investors to buy on the decentralized exchanges, to buy and hold and manage positions. So it's going to be very exciting to see how it pans out. But today, like, it was 99% technicals, pure psychology of buying and selling. People often think, Jiggy, why is the price going up? I go, well, more people are buying than selling. Why is the price going down? More people are selling than buying. Because you can buy, like I showed you a video on Decentraland the other day. It's a powerhouse project, right? There's no doubt about it. Top 40 coin, $6-7 billion market cap. The website is on another level. It's metaverse. We know Facebook has recently changed its name to Meta. That gives us a massive indication that metaverses are going to be a very huge deal. But Decentraland is doing a 1, 2, 3, 4, 5 over wave 3. And I go, It might go up, but the probability states that it's going to be overextended, and people that bought out a wave 2 and a wave 1 are going to be taking profits, right? When that's the case, we should anticipate a wave 4, be patient for it like we did with CrossSwap, and then at the end of a wave 4 and the end of a wave 2, then look to buy. Always probabilities, right? That's the game. That's the game. If you don't like it, go home. If you love it or get to like it, get with the program, just make sure you're just acting with the probabilities. So at the end of the bull run, your bag should be, filled with cash rather than giving it back to the market. All right, I'm gonna disappear. I can waffle on all day, but I'm gonna leave you to it. I'll see you soon.